talking resilient now. So this is the house or the portfolio of regional malls, you could say, that Des de Beer built. He was the guy who basically came up with the idea that places like Witbank, now called Emalahleni and so on, couldn't possibly still have all those crummy stores on the main road. They must have a new sparkling mall at the fringes of the town. And then he brought all of the national retailers into those. And by national retailers, I mean people like ShopRite, Checkers, Woolies, Famous Brands, and all of that kind of stuff. Incredible success story. Market capitalization, 45.9 billion rand. Yield on this one, it says 3.19. Again, I'm a bit vague on those and where they come from. But that's what it is.
Yeah.
But that's also a great success story. Share price.
This has been very, very successful. And they've taken a very different outlook. They've said we're developing in all the Chumeb and all over in the... Look, they have got one or two relatively large, let's call it urban malls, but most of the stuff, it's the smaller towns where they dominate. Now, I mean, I've been involved in property for a while now. In the smaller towns, if you dominate, you can do extremely well. But if you're the second or third player, you're dead. So you have got to continually ensure that your mall is the best and just is that no one else even thinks about coming into the smaller towns in competition to you. But you can be very successful. Look, they've had they've also invested overseas in Nepi and Rock Castle.
That's also been a huge
it's also about 20% of their portfolio. Now, even though the yield here is much lower, they are estimating a bigger distribution growth next year than a lot of other guys. But even then, it's only 10%. You know, it's not 30%. And you think at a 3% dividend yield, man, you know, it once again looks expensive.
But, you know, that chart there suggests that if you bought them and stopped worrying about interest rate cycles, you would have been very happy. A move from 30 to 120.
The biggest single determinant of future performance is the price you pay. It's not actually what happens afterwards, quite frankly.
And what you seem to be implying is that part of the growth success of this company has already now happened, and it's going to be a lot harder because you can't take the same mega mall, glossy type place to a very, very small location.
There's not many left.
There are not very many left that haven't already been exploited in that way. Okay. The international thing, I don't know, that makes it hard, but hot or not?
No, not hot, unfortunately.
Too expensive at current levels. Okay.